Good day, Market Chameleons, and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon webinar series. Before we get started, let's take a look at the shared disclaimer. Be aware that neither Market Chameleon, Demetri, or myself are registered investment advisors or a broker dealer. If you're searching for investment advice, please reach out to a licensed professional. This show, as all our shows, is for informational purposes only concerning Market Chameleon tools and products. With that, one last look at the disclaimer, and let's welcome Demetri Parmammonic to the stage. How you doing, Dima?
Hey, Will, how's it going?
Good. So today we're looking at multi-leg trades.
Yep. No, not multi-leg trades. I'm gonna show a tool that allows you to look at the just the option volume trading activity across the entire market with a table by symbols and then kind of a summary of aggregated volume. I'll show you what that looks like. So if we come up to the main menu under options, go to options volume. And do you see my screen, Will, by the way? Will? All right, I think I lost Will. But
it's up there now, D. I just muted myself.
Okay.
Right.
So under this tool, what you get is a table here, and we do have some filters, but a table of all the stocks that have listed options and that options activity. And then down below, we get some summary statistics and analytics of the total volume traded in aggregate in the market. So we'll just go over some of these data elements and what they mean. So up top, you could see here that you can sort all these columns. I think it's defaulted right now by total notional volume traded in the options. So you could see here the symbol, NVIDIA's name, stock price change. This is the amount of traded or the amount of trades in options, not the volume, but the amount of trades, because you could have one trade with 1,000 contracts, or you could have 1,000 trades with 1,000 contracts. If one trade is one contract, then you would have to do 1,000 trades to get up to 1,000 volume. So these are the total trades count. This is the total value of all the options that traded, so 2.35 billion in NVIDIA. This is the 90-day average daily volume. So if we took 90 trading days and divided it by, the total and divided by 90, that's the average daily volume. And this gives us the relative. Yep.
I apologize. I brought it up a little late. Could you just walk the chameleons through how you got to this screener again?
Yeah, so under the options menu up top, click on options volume.
Perfect. Thank you.
Yep. Then we got the relative notional value. That's taking the days value versus the average daily notional value, and that gives us a relative. So if there's a lot more than the average daily volume, this ratio will be above 1, right? If it's less than, then this ratio will be below 1. So like, for example, in SPY, we had $1.3 billion worth of options that traded, but on an average daily, we see 2.6 billion. So you could see there that ratio is 0.53. We also have here a breakdown of the notional value by call options and put options. And this allows us to see the comparison. Were they equally distributed, or was there a larger lean towards trading a certain type of option? Like in this case, in NVIDIA, a lot more call dollar value traded than put. This gives us a breakdown of the volume based on the type of orders that entered. So you could enter in an order like a buy or sell of a call or put. That would be like a single leg. So that's 71% of the volume. You could enter in a multi-leg trade where you enter in a call spread or a put spread or a butterfly. So when you enter in a multi-leg trade, what you're signaling is that you need all the legs to get executed simultaneously or none, right? So you don't want a partial when you're entering a call spread. You need both legs to be executed. You're not trying to leg into a call spread. You want to get executed on both. So that's a multi-leg order. And then a contingent order is when the option trade is tied to something else like a stock, like a buy right. So here, this gives us, individual stocks. And then down here, we could come in and kind of just get a feeling of what's going on in aggregate. And this over here chart, this pie chart, is showing us if, what sectors or what, where the volume is flowing to. Okay. Maybe there's a particular sector where more options are flowing than other sectors. So here we get a breakdown. We can see here 25% of the options volume were in the technology sector. So like NVIDIA, Apple, that type. We have 28.5% of the volume were broad-based ETFs. So broad-based ETF would be something like SPY, QQQ, IWM, which is an ETF, but not focused on a particular sector or industry. It's more of like a diversified, but it's based on like either like market cap stocks or low cap stocks, S&P 500, stuff like that. So that's the broad-based ETFs. So 28.5% of all the volume were broad-based ETFs. 25% were in technology sector. So you could see that's already over 50% of the trading volume. Then we have 11% were undefined here. We got 9% consumer cyclicals, 7.9% financials. So the undefined could be like something like leveraged types of products or special ETFs, stuff like that. So we could see that a lot of that volume is concentrated, right? A lot of option volume does flow to either broad-based ETFs or technology sector. This gives us kind of just a breakdown of all the volume. So we could see today's total volume versus average daily volume. So pretty close, around 50 million contracts. This gives us a split between total puts versus calls. So 39% puts, 61% calls. Much more calls were traded across the entire market. This tells us how many stocks are trading at a volume greater than their 30-day moving average. But that will include, keep in mind, like some stocks may trade only 10 contracts a day. So if you traded 12, it would be above that. Also, this gives us the concentration here of volume based on the top traded stocks. So the top 100 stocks, if we took, so there's over here 5,685 stocks that have options listed. They're available to trade options. The top 100 busiest stocks, so if we sorted by volume, the 100 stocks ranked by the highest volume traded, okay, represent 80% of all the volume. So 80% of all the options volume are in 100 stocks, okay, out of the 5,600. If we took the top 10 stocks, okay, so if we took like, here we have top, take the top 10, NVIDIA, SPY, this, Tesla, QQQ. If we took the top 10, that represented 47% of all the volume. So this lets us know that a lot of the options volume is very, very concentrated, right? That it's not like equally distributed where you have, lots of volume across all these different stocks. That options activity is very concentrated. And here we see that if we just took ETFs alone, that represented 49% of the volume. So you can see like half the volume is going to ETFs, the other half single stock securities. Let's come down here, just get another breakdown. So here we see a breakdown of all the volume. 49% of all the volume were in single legs, 47% multi-legs, 4% were contingent. So that just shows us the breakdown of how people are using options across the entire market. And a significant amount, you could see it's almost a split between single legs and multi-legs. So multi-leg trades are a big part of the day's volume. Here, we get a concentration based on expirations. So if we took an option that has less than a week, 5 days or fewer, that represented 54% of all traded volume. So more than half the volume is in the very short dated options. Okay, less the options that represent less than 5 days, 5 or less days to go. The next one is this range from 11 to 30 days. That's 18%. And if we wanted to go like way out, like the leaps, that's only 7%. So now we kind of get a picture of how people are trading these options. We see a lot of them are in ETFs, technology sector. There's a split between single legs and multi-legs, and the concentration looks very heavy towards the shorter dated options. What about the types of traders using these options based on the volume of the trades, right? So the each trade has different size, different volume to it. What type of trading activity do we see? What type of trader is participating? So we see that the very small trades were 21% of the volume. These would be like trades that are like a one lot under $2,000 in notional value. 30% would be retail. Professional size trades would be 30%, and the 30% institutional. So kind of like I would say between trader type, it looks fairly closely distributed. The single leg calls, if we split them up, single leg, they're 64% were in the call volume, 36 were in the put volume. And if we wanted just to get the same kind of breakdown for each calls or puts, we see this is how the calls also, most of it were in the shorter dated options, just like the puts. Okay. And at the time of the trade, we could see the moneyness of it. So here we see 57% of all the volume in the calls were close to at the money. Right. So at the time of the trade, those options were closer to at the money. 35% were out of the money. So 35% of the volume were out of the money. The puts, 50% were close to at the money, and 47% were out of the money. So here it's a little bit more evenly split, where there were out of the money trades in both, but for the most part, at least half of the volume is concentrated around at the money options. So that's pretty much it. I'm gonna have to check on. I think this small and retail are overlapping. As I'm looking at it, I think we have some overlap here. The small and retail. I think that's why we're seeing those add up to more. But I'm going to
That's
check
why the
on that.
percentages are off. Yeah.
Yeah. All right, so I'm going to stop there, Will. We covered this report. I think, everything in here. So we're going to stop there. We do want to just quick note that we're going to be out for about a week, right? Because you're
Oh
not
my
going
God,
out.
it's summer vacation for the chameleons. We're taking kids to colleges, kids to camps. I mean, we got no vacation for me and Dee, but a lot of family stuff going on. So we have we'll probably try to get back by next Wednesday or Thursday next week. We will be live again. I will be sending out a daily video, a pre-recorded video for everyone to see. And thank everyone for being part of the chameleon community. Great job as always, Dee.
All right. Thanks everyone for joining, and stay safe out there. We hope to see you next week.
All right. Great job, Dee. We'll see you next week. Bye-bye. All right, everyone. You have a great week without us live, but we will send out a daily video. And if you go to the YouTube channel and register, you'll see when those videos are released. I'll release them at 9 a.m. as a premiere. So I think you can chat on them if you want to come in at 9 and have a chat with each other. But that will go through the 5 days we are away. So everyone have a great day today, a safe trading day, a great week. Remember to follow us, like us on all the social platforms. Thumbs up if you're on YouTube. Greatly appreciated. Have a great day, everyone. Bye.